Hey there, check this out. There's this trader, John Carter, who's been day trading since way back in 1996. And get this, he managed to rake in over $18 million in just 1 year from day trading the market. Impressive, right? But that's not all. He's also an author with a best-selling book titled Mastering the Trade. Now, here's the interesting part. He developed a killer strategy centered around a specific indicator called the TTM squeeze, which he actually created himself. So, what's the deal with this TTM squeeze indicator, you ask? Well, its primary purpose is to help traders spot potential breakouts before they happen. It's like having a crystal ball for trading. Let's dive into how you can use this indicator. First things first, you need to add it to your trading chart. Just head over to the indicator search tab, look up the TTM squeeze indicator and select the one made by Draken. Once it's on your chart, it's time to tweak the settings a bit to make it easier to see. Head over to Indicator Setting tab and navigate to the Style settings. Here, you can change the color to your liking. And voila, that's all the setup you need. Now let's understand how the indicator actually works. The TTM squeeze indicator is made up of two main components. First, that's the momentum histogram, which you are familiar with from the other indicators, especially MACD, of course. But it's not just like that. Think of it as a smooth momentum oscillator that hints at the possible breakout directions. When those lines turn blue and soar above the zero line, it means that there's positive momentum in the market. On the flip side, if they go gray and dip below the zero line, it's a sign of negative momentum. The second component is the zero line itself, which sports red or green dots. If you see red dots on the zero line, it means there's a squeeze happening, like a pressure cooker about to blow. This indicator essentially helps you gauge the volatility and momentum of the market by comparing Bollinger Bands and Keltner channels. When Bollinger Bands squeeze inside Keltner channels, it signals low volatility and impending breakouts. This squeeze is aptly named because it feels like the market's coiled up and ready to spring. And when those Bollinger Bands start stretching outside the Keltner channel, it's like a spring unwinding. That's when momentum starts surging. Now that we've got the indicator's mechanics down, let's learn how to read it effectively. But before that, it really matters that which cryptocurrency exchange you're using. I highly recommend when you want to try any new trading strategy, you must backtest it. Or if you don't like backtesting, you can just use demo trading, which is available on Bybit. Previously, I made a video about it. I don't want to make it so long, so you can check it out and learn how to do it. But here's the kicker. I have a surprise for you. If you use my affiliate link down in the description, you have the chance winning up to $35,000 worth of USDT just by signing up, doing your KYC, and depositing at least 100 USDT and start trading on it. So what you waiting for? Maybe it's going to be your lucky day. For instance, when you see those histogram bars shortening, it's a sign of low volatility, just like a calm sea. And if you look at the price action, you'll probably notice it's not very turbulent during this period either. Conversely, tall histogram bars typically accompany Bollinger Bands venturing beyond the Keltner channels, suggesting heightened volatility. And guess what? The price action usually mirrors this with some exciting movements. When the zero line of the TTM squeeze indicator turns red, it's a sign of consolidation. If you spot several red dots in a row, that's an indicator that a squeeze is happening. This means there's a high probability of a breakout occurring when you see the next green dot. So now that we've got a solid grip on how the indicator works, let's delve into how to use it to make some strategic moves. The most common approach is to keep an eye on the zero line. Wait for several red dots to appear, signaling a squeeze. Then, when a green dot pops up, it means the squeeze is over, and the Bollinger Bands are expanding outside the Kepler channel. To determine your trade direction, you'll want to glance at the momentum oscillator. If it's blue and above the zero line, that's a bullish sign. Conversely, if it's gray and below the zero line, it's time to think bearish. Let's say you see that blue histogram. That's your cue to enter a long position. You can set your stop loss at the recent swing low. And when you start seeing those histogram bars shrinking, indicating declining bullish momentum, it's your signal to exit the position. However, here's a catch. Sometimes the market doesn't play along with the squeeze right away. You might see red dots followed by a blue histogram and it's time to go long. But if you zoom out and see that the market had a recent trend reversal, it's probably best to sit tight because that bullish move might just be a pullback before more downside. To avoid falling into these traps, you can use a method called TTM squeeze divergence trading. This technique spots divergences between the histogram and price action to predict future price movements. If you notice lower highs on the histogram alongside higher highs in the price action, it's a bearish divergence. The opposite is true for a bullish divergence as well. Divergences can provide hints about trend strength and potential reversals, so always keep an eye out for them. Now that we've covered the ins and outs of this TTM squeeze indicator, let's put it all together to enter a trade. Say you're looking at the indicator and it's been flashing multiple red dots on the zero line, followed by a green dot. This is a classic squeeze release pattern, and when you peek at the histogram and see those bars turning green and growing taller, it's a bullish signal. To seal the deal, check if the price is trading above the 200 period EMA for confirmation. So you decide to go long, setting your stop loss at the recent swing low and targeting a previous swing high at least a 1.5 times risk to reward ratio. But wait, here's a different scenario. The market's been in a strong downtrend and you see red dots on the zero line. The histogram shows a bearish divergence and the price is below the 200 period EMA. You might think about going short, but you're cautious because it could be a pullback. So you wait for the price to reject the EMA before entering a short position. And once you spot the price rejecting and bearish volume increasing, it's your cue to enter the trade. Exit strategies can vary, but keep an eye on the histogram for signs of momentum waning. Now I just want to share with you and show you just a part of 100 times backtesting / forward testing this strategy to make it easier for you to determine how powerful this strategy is, and shortly after I will be sharing with you the results. As you can see, the results are crazy good. How much money you want to make? And here's my surprise for you. Previously, I made almost an hour of video completely about proper risk management, how to do your proper position sizing, risk to reward ratio, winning ratio, whatever you need, whether you're a beginner or a pro, but you're kind of confused in between what am I supposed to do, this is probably for you. So give it a try, watch it, you will come back to me and you will thank me without any doubt. Also, if you want to increase your profit factor on the other side of the coin, beside the risk management, I highly recommend to watch this video of the mixture of Fibonacci retracement levels with supply and demand, or let's say price action, and you're going to find it crazy good with any trading strategy. It doesn't matter what trading strategy you're using, what is your indicator, what are you doing. This combination works out on any time frame, any trading strategy, and it's crazy good. I tried it out like thousands of times and it works out perfect. And that, my friend, wraps up how to effectively use the TTM squeeze indicator in your trading strategy. If you found this helpful, don't forget to give it a thumbs up by liking the video and hit that subscribe button if you haven't done it yet. And by turning on the notification bell, you're going to be the first to be informed when I'm uploading a new video, which I'm doing on a daily basis. And if you have any burning questions, feel free to drop them in the comments. Happy trading!